We know who they are, guys, right? Equilar. This is the company that every year tells us who the highest paid CEOs are, what they do, how much they make, and that sort of thing. They talk about things like the gender pay gap and whatnot. Well, 2021's numbers are in, and as Tyler pointed out, we do have the top 5 CEOs in terms of total compensation. Now, that includes both the cash payouts and the stock grants, options, restricted stock units, that sort of thing. So take a look at the top 5. You've got right now in the top spot Intel's Pat Gelsinger, who took home $178 million worth of total compensation. Again, a mix of cash and stock. Tim Cook over at Apple, roughly $98 million. Hock Tan over at Broadcom, $61 million. Microsoft's Satya Nadella, around $50 million. And Tom Rutledge, the CEO over at Charter Communications, very big cable powerhouse, taking home the number 5 spot at $42 million. Now, if you take a look at the overarching macro stats, this is where things get a little bit more interesting. And, of course, with the overall narrative these days about what's going on, you do have CEO pay coming in much higher than anticipated from before. We're talking about a 31% increase to about $20 million for median CEO pay. That's on a survey of companies that are making at least about $100 million overall in revenues. So if you take a look at that, they also talk about this idea that the pay gap between CEOs and normal wage employees was widening. Take a look at this overall stat. You can see here, $254 in CEO compensation for every $1 of the median average wage worker at that particular company. That's been a very political lightning rod for a lot of folks for a long time. But what's significant about this, guys, is that it's a 7% increase. That 254 to 1 ratio, a 7% increase over 2020. So that's where you start getting to this discussion about whether or not that kind of pay is starting to show badly among Main Street America. And that's when it becomes an issue, because we know there's all these unionization efforts at companies where they haven't had unionization efforts before.
Exactly. A couple of other minimum wage announcements today from Verizon, I think from Fifth Third Bank. So they'll just show them this full screen.
Well, what's interesting about this is how are these companies able to then pass those costs on? If you are going to pay higher wages, which we know a lot of companies are, does the company end up absorbing those in terms of margins? Or are we, as a consumer base in America, more likely to stomach or tolerate paying higher prices because we know it's for the greater benefit of everybody else out there who's able to then take a little step up in terms of their overall?
The famous